Let's go out the charts now and bring in FundStrat's Rob Sluymer. Rob, great to see you before the holidays here. We've got a panel of pretty bearish folks tonight. And so I wanted to get your take. I know the charts are very young for a lot of the stocks that we were just talking about, whether it be QuantumScape or C3.ai. But what do you make of charts like these when you see giant moves day after day, double-digit % moves?
Well, I always love the expression. It's the client's expression, which is even turkeys fly in a hurricane. And then we always get the calls from the clients saying, well, turkeys can actually fly. But it's really indicative that we're getting to the later stages of some part of the move in the market. I'd be careful arguing that this is the end of the cycle. We don't see it that way at all. We think this is the end of this intermediate term move. And what I mean by that is that we've had a lot of stocks, particularly a lot of the smaller caps, that really haven't done a lot for quite a while between June and October, and they've really ripped. As someone pointed out earlier, the microcap and the small cap indexes are up 30% since, I think, the October low. So that's a pretty big move, and they should pull back in. I mean, if we look at the S&P 500, we track this indicator that measures the percentage of stocks with rising weekly momentum. And it moved from oversold levels in September, where most of the cyclicals started to bottom, and is working its way back into overbought territory. So we think as we get into January, early February, we're probably setting up in the market overall for about a 7 to 10% pullback on the S&P. And I think that's a very healthy consolidation or pullback within an ongoing bull market. So that's our first take. But there's lots of stocks that I think have been pulling back over the last, call it 3-4 months. Like, they're a little bit more defensive, and they're not as sexy as some of the stocks we just talked about, but I think they're pretty timely. Like O'Reilly, for example, had this big move off of the March lows and it's really just been marking time now for almost 4 months. And it's right back to the 200-day moving average. It's pretty timely. Its weekly momentum's bottoming. We see the same thing in something like a Thor, right? It had this big run and then it unwound. It's pulled back, like a lot of growth stocks. And actually looks like it's starting to turn up here from these levels around the 200-day. I think that's pretty timely as well. And then the last one, it's had a bit of a pop here, Uber. But I think of this as a secular growth stock with that cyclical kicker that should participate once we get back to so-called normal. And this pullback into the, call it the low 50s, high 40s is a pretty attractive entry point. I'd be looking at buying any one of those three stocks that I think will shield you for the broader pullback that we see in the market coming in the first quarter.
Quick follow-up, Rob. In the 7 to 10% pullback in the S&P 500 that you're seeing, which sectors and or stocks will do the worst in that pullback?
Well, I think it's going to be growth and cyclicals that are likely to pull back. I mean, think about the mega caps. I think Dan just mentioned this. The Microsoft and Apple are just trading sideways. I don't see a lot of risk in those names, but some of the other faster moving growth stocks and the speculative names we've just talked about, I think all of those have to come back in. I also think that some of the cyclicals on this next leg up are probably vulnerable. We actually want to buy a lot of those names on that pullback through Q1 into Q2.
All right. Rob, great to see you. Thank you. And happy holidays. Rob Sluymer, FundStrat. Tim Seymour has got his tech issue straightened out. He's also got a vest on and a holiday tie. So holiday festive is the theme tonight for the Seymour household.
That's what I'm here for.
What did you make of Rob's charts?
Well, I think, the discussion about an O'Reilly and even a Ford, I think these are, to me, very cyclical names. And the Ford story, we've spent a lot of time talking about autos that may have a little bit more of an EV story to them. Rob used another word also, though, that I think is important in terms of the frothiness. When you say secular, it's almost a euphemism for I almost don't care what I'm going to pay in a bull market for something. And that includes some of the stocks that Dan outlined, some of the stocks that even the other guys talked about. But it's software, it's gaming, and it's certainly even cloud. And so some of these stories, I think, are ones that are certainly most at risk in a market pullback. But the question is, which part of the market are you more impressed by? And to me, it's the breadth of the market. It's the fact that banks and industrials and stocks that have really lagged for a long time are starting to break out. It's impossible to argue that there are pockets of the market that make no sense. I'm not sure that we haven't seen that at other times, whether it was when resources, data's the new oil. Well, how about when people were paying almost anything for a commodity company or for a food company? And I just think that's the secular trend we're in.
Guy?
It's interesting. You know, he mentioned Thor Industries last night. What show comes on after ours each night, Mel? I think
Mad
it's
Money
the Mad
with Jim
Money with Jim
Cramer.
Cramer, as you know. Thank you. I appreciate that. And last night, Jim had the CEO of Thor Industries on, and they spoke to a lot of the things that we've talked about. I mean, the fact that the stock had a huge run, sold off on the comeback trail, mature company, a lot of growth ahead of it at a reasonable valuation. I agree to the earlier comment. Companies like that make sense. To the things we were talking about before, and we had a really interesting conversation with Steve Leisman last week, where, you know, tongue-in-cheek, he sort of went after us in terms of you guys just buy stocks indiscriminately. And I think what we tried to point out is it's really on the back of everything this Federal Reserve and central banks around the world have done. They've said themselves that valuations don't matter. So when you hear comments like that, it empowers people to do things they shouldn't be doing. I mean, this is not the okay boomer anybody out there, and please don't at me. But I would say for everybody that knows what Palantir does, there are probably 9 people that think it's the Seeing Stone out of Lord of the Rings, and that's problematic.
Well, it is. It's just not that same one. That's the problem.
Shepard Smith here. Thanks for watching CNBC on YouTube.